Hey everyone, welcome to another edition of the weekly property market update with myself, Rob Cohen.
Myself, James Wild.
Hope you're all well, hope you all had a good week, got through the international football, Premier League back at the weekend, and we are back with the latest data and intel and information of what's going on the street in the property and financial lending banking markets. I've been working away, traveling overseas, meeting client after client after client after client. If you're not one, please reach out. I want to see you. So much happening. We're going to get through as much as we can today, as always, and James is going to update us on the latest sales and intel data.
Yes, thank you, Rob. So we'll go straight into the data this week, week 45 of the year. New instructions slightly down this week, 233 there. But in terms of sales, it's been a strong performing week, Rob. 150 sales this week with a number of properties under offer again this week, 235. So that sale pipeline continues to perform, even though we're slightly down this week on new instructions. We're entering into that period where people are starting to maybe think about in their mind to hold off until the new year, as traditionally, normally at some point sort of towards the sort of mid to end of December, things start to close down in the property industry, and I know sort of construction sector completely closes for 2 weeks normally during this time.
Yeah, I think, the period we've gone through has been interesting. The numbers have been healthy, and suddenly we reach this Christmas period, like you've said, and there's going to be a downturn. Although, and I think this is important to make everyone aware, in previous years, I know last year was quite special with COVID, but in previous years, I would say that the downturn of the holiday period has generally been reducing less and less over the years, to which people have come back on the 2nd and 3rd of January and it's hit the ground running. Yeah,
I'd agree with you on that, Rob. I remember this in the year of 2019, in the run-up to Christmas. I think I was sending reports on in the days just before the Christmas holidays, and we were going right up to the wire, then working in between the Christmas New Year period, and then hit the ground running in January. It's like it almost didn't happen that particular year.
And let's get out there now. All of our amazing clients that work with us and are listening or following. As is with every year, we are open throughout Christmas and the New Year to support all of your valuation needs. Just put that out there. We are open continuously for business.
Thanks, Rob. Just moving on to some other data for this week. The ONS and Land Registry have released their house price data for September 2021, and although a little bit historic now as comparison to some of the data which we've been bringing you and from other house price indices such as the Halifax and Nationwide, their data for September 2021 has been that house prices have increased by 11.8% for the annualised period up to September 2021. With the average house price hitting a record high of £270,000. That's according to the ONS and Land Registry. And I think across the UK and in London, Rob, to a certain extent, which is highlighted by some of the data which we're bringing you week on week, that the lack of stock is continuing to impact on house prices, and it's often putting upward pressure on agents in terms of what they're listing stock as, and as buyers continue to search for more space, both inside and outside, in terms of gardens and amenities, often in more suburban locations. I mean, I don't know if you've got anything to add to that, Rob. What your thoughts are there?
Yeah, not only is there a lack of stock, the stock that people want is more defined than it was pre-COVID. Thus, instead of having generic lack of stock across the market, you've got more specific lack of stock for the type of property and profile that the demand of the market is looking for. So that's compounded into then having more applicants and viewers per property that comes on, that puts a huge pressure on bidding and pricing.
Yeah, no, completely agree with that. And it's something that we're seeing in the market in terms of those flats with no outside space have been penalised in the last 18 months. And again, buyers looking to move out of cities into more suburban locations or more commuter belt locations, they've got a very predefined search criteria of, off-street parking, a large garden, walking distance to local amenities, transport hubs, and like you say, Rob, that really compounds the stock on a limited basis on what's available. There's only so many houses in walking distance to these amenities and to transport links. Staying with property in terms of news, in terms of Europe, the European Central Bank this week has announced, has issued a stability report citing concerns over the housing market in the European bloc. The report stated that some of the risk-taking by some of the non-banks, but the lending institutions and sovereign wealth funds have been increasing in the market, and they have issued some concern warnings over some possible price corrections on the European bloc. Now, despite in Europe, they've got surging inflation similar to the UK of around 4%. However, the ECB, European Central Bank, has stated that it doesn't see any interest rate rises in 2022. So we're going to have to monitor that and see what happens there and what impacts that has on those markets. I know Rob is particularly active there, and having just been on the continent, Rob, in Spain, Gibraltar and the Balearics, how is the market performing there, would you say?
Yeah, I'd say that Western Europe and in those markets specifically, that everything's performing extremely well considering what we've been through in the pandemic and COVID. Very much based upon the fact that debt is cheap, remortgaging is cheap, refinance is cheap, like you've just mentioned, and that has allowed there to be a fluidity of volume of transactions that has surprised everyone really, following on from COVID.
Yeah, and Rob, has there been any sort of buyer trend shifts in terms of, similar to that in the UK, a lot of people migrating out of city centres and more into suburban locations? Have you seen that similar trend in Spain and Europe?
Yeah, I think what we are seeing is that prime and super prime stock valued individual assets, especially with that external space in prime locations, has outperformed the rest of the market, and we've seen that there's been a lot of interest in that, and the ultra high net worths across the world and specifically Europe in those capital cities, whether it's Madrid or Paris, have been buying certain asset classes of residential stock, and that asset class has been growing in value and has been performing exceedingly well, very similar to what we've seen here in the UK.
Yeah, I mean, like we say, Rob, super prime in London has been performing extremely well the last 18 months. We've brought you a number of super prime sales which have happened across London, amongst the highest we've ever seen here in London. In terms of the high street news here in London, the Fraser Group is planning to close its Oxford Street Howser Fraser store in January. This is following the City of Westminster's decision to grant planning permission for the conversion of that building into offices. It's going to have a new ground floor shop front, as well as the 7th and 8th floor being demolished there, with a 3-storey extension going on the building, which will house a new restaurant on Oxford Street there. So some repurposing of that particular store happening, Rob. Hopefully that will rejuvenate the building. We're going to see less vacant buildings on Oxford Street, formerly of flagship stores, and that was the place to be. But some repurposing there, as we see that the high street market, retail market shifting. Got some news on the office market. Rework's revenue has risen by around 11% between the second and third quarters of 2021, so some positivity for the company there. However, occupancy rates have risen to around 56% for the company. However, that's sort of a long way below their sort of what their pre-COVID targets would be, and they're recording some very high net losses still for that period. $844 million of in the red there for Rework. So despite there being some confidence of a resurgence in the company with a rebound in demand for flexible office space, we're going to have to wait and see how in particular Rework perform over the next 12 months, and maybe other flexible office space providers in the market. And close to home for us on Tottenham Court Road, Rob, the American Global Investment Fund, KKR, has acquired the Grade 2-star listed Heels building for around £112 million. It's currently partially vacant there. That building, as Habitat, has moved out half of the building, with Heels still occupying a portion of the building there. So some of the southern parts of, as we see recently, Rob, of Tottenham Court Road being refurbished at the moment. So hopefully the sort of strip of Tottenham Court Road coming off Oxford Street, New Oxford Street, is going to see a slight resurgence, whether it be in terms of some of the office space provided or the retail offerings.
Absolutely. I mean, the resurgence it's seen over the last 10 years has seen one of the most dramatic changes in retail office profiles of a major street in London. The Hills building is a beautiful, beautiful period design, a real historic piece of London that I believe will continue to lead to this end of the Tottenham Court Road only moving forward in terms of its offering both retail and office, as it enhances and improves as time goes by. And I think the historical position of the road that was very electrical based has completely changed, and it's now a high performing retail location that's going from strength to strength.
As you say, Rob, over the last 10 years, it's changed dramatically, Tottenham Court Road. Just in terms of the last 12 months or so, we've seen some regeneration of public realm areas, particularly around the Goode Street station, and also some further public realm space just off Store Street, actually coincidentally behind our office here. So some work being done there by the City of Westminster and Camden councils. Just in terms of other wider UK news, it got announced this week that the HS2 rail link to Leeds, that portion of the journey map there, has been scrapped, with the rolling stock due to use the existing tracks for the East Midlands hub to the Leeds leg of the journey. Hugely disappointing for many people that live, and also businesses that are based in that area. We know that phase 1 of the line is due for completion by 2033, which will link London Euston to Birmingham with a journey time of approximately 45 minutes. That is still due to go ahead, with the phase 2 linking Birmingham with Manchester and Crewe also going ahead. Now, Rob, we brought everyone news earlier this year. The Bank of England did announce in April 2021 that they were set to open a new employment hub in Leeds, moving many staff out of London up to Leeds in terms of getting a more holistic view on things, and also trying to balance out any sort of north-south divide there. Well, this news is likely to come as a slight disappointment to them in terms of connection and links with London and Leeds. But we'll wait and see what happens. There's obviously there could be a review into that, or some sort of backlash there. But we know that the initial comments are that the time it will take to construct that leg of the line, it's going to take too long, and that's not quick enough in terms of the balancing out in the UK that the current Prime Minister wishes to see.
I've had some great meetings out there this week with one of our major panel managing clients, discussing strategy and risk. Another major bank that we've met up with this week to discuss what's going to be happening in 2022, and the level and volume of meetings and face-to-face and one-to-ones that are taking place are really getting back to pre-COVID levels. It's what I love doing. It's what makes everything great about business and the industry that we're in, and moving forward, very much looking forward to that, going from strength to strength, because that's where the very best intel and data and information is shared, the best ideas and the best brainstorming and creation and innovation happens. And I'm so looking forward to that continuing for the remainder of 2021 and aggressively get out there and meet the marketplace in 2022.
That's it, Rob. And just following on from your point there in terms of restaurants and various seasonal gatherings, those event spaces being booked up for this year, the calendar's fallen very kindly this year. There's sort of 2 weeks of on the lead up to Christmas. You've got sort of the week leading up to Christmas Eve, with Friday the 24th, and then the week prior, those sort of Wednesday, Thursday, Friday, the sort of being the 15th, 16th, 17th of December. So I think that the calendar's also fallen kindly for those retailers. So I think that's positive again.
Brilliant. Thanks for everything, James. Really appreciate it. Great intel and knowledge as always. Thank you for listening, watching, following, podcast, YouTube, all of the social medias. Great feedback through LinkedIn, email, the direct messaging, and the WhatsApp that I'm receiving. I'm loving the more direct consultation of questions and queries about very small, niche, specific areas within the marketplace that maybe we haven't delved into so deeply on the show. Obviously free to receive that 24/7, and we will come back to you with all of the information we can. And that just leaves me to say thank you again for listening, watching, following, and we will see you all next week. And take care, and thanks, James.
Thanks very much, everyone.